So what does super with impact mean to us? It's actually a very big question. It's our positioning of what we're delivering to members. And from our perspective, it's the positive outcome that we can create. And three really important dimensions to this. And the first one is actually supporting our members in terms of them facing the future with confidence. We have such a deep understanding that for our members, it is about seeking that dignified retirement, etc. But it is really important that we're building their confidence in that. The second aspect in terms of the positive outcome we create is by being a gutsy advocate, and we actually call ourselves that, a gutsy advocate for a fair and healthy community. And the third one is a very big pocket that is focused on delivering investment excellence with impact. So bringing these three pillars together, that is how we define super with impact. And in fact, we've trademarked the term super with impact, very much focused on this opportunity we have to deliver positive outcomes for our members.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Debby Blakey, who's CEO of Hesta, a $91 billion Australian Superannuation Fund dedicated to the health and community services sector. She's also president of the Australian Council of Superannuation Investors and director of the International Corporate Governance Network, ICGN. Welcome, Debby. Thanks for joining me today.
Thanks, Aoife. It's so good to be with you.
Well, let's start by talking a bit about your background and the path that you took to this role ultimately. Were there any surprising turns along that journey?
Oh, there were probably a lot of surprising turns, actually. I started my undergrad studies in maths and computer science, absolutely passionate about maths. And in fact, my early years were working with consulting actuaries, mostly on merging small defined benefit plans. But later, probably the first surprising turn is I did venture out and started my own consulting business. And I did that for 12 years. That was in South Africa. And then probably the very big surprising one was 25 years ago, making our way to Australia. And that's just been an incredibly and very rich working experience.
I love it. And I also did the same thing. I had my own consulting firm for a period. I'd love to learn what impression that had on you. How did it make you think, that spell working for yourself? Any particular traits or learnings that you took from there?
Yes, I think a lot, actually. And really, in many ways, I think the reason I did it was I had had a break. I'd done a lot of studies and I had 2 children. And I really started out because I felt it would give me the flexibility I needed at that stage of my life with respect to my young children. But incredibly, it was such a rich time. And I think for me, the most amazing thing is a small business. And as I built it, the diversity of what you do every day. You know, one day I would be doing marketing, one day I'd be doing compliance, pitching for new business, making sure I delivered to the business I had. It just taught me a lot of diversity, I think, in what you have to accomplish every day. And actually, I often reflect, I think it set me up well ultimately to be CEO. Because in many ways, it's the same. You don't know what you're arriving to every day. It could be very different to what you thought. And that ability to still get done the work, the base load work you need to do, but to deal with whatever comes your way at the same time.
Very interesting. And certainly you could be familiar at throwing your hand at any job needed in the chain, I would think, as well, when you have your own business.
Absolutely. And actually, I think in Australia, that set me up well when I was given new opportunities in different areas. An example that I think amuses people is there was a time that I was the exec who led risk, compliance, and technology. And they weren't things that I'd done a lot of, but it was an incredible opportunity as deputy CEO to lead that piece. But also, of course, I felt I could do it. I could back myself because of that experience running my own business where I pretty much had to do everything.
And another question on your origin story before we move into the current role. Growing up in South Africa, a country that would be considered probably an emerging market today, did that have any impression on you or affect the way you think or maybe think about volatility, etc.?
It had huge impact on me. I mean, I think the first impact, of course, that was in a time mostly in South Africa. I was there as South Africa transitioned to democracy. But if I think of before democracy, through that transition and after, first of all, a huge focus on social justice, doing what's right, and that societal impacts matter. So I think that was absolutely core and is still core to who I am. But I think South Africa was a very interesting place in the 80s and 90s where there was incredible innovation actually in financial services and in financial service products. And in fact, there are some global products today, for example, the living annuities, and even Australia's allocated pension that started actually in South Africa. So I think there was a lot of innovation, but absolutely market volatility, very volatile currency, always having to deal with that. We had tremendous prudential requirements in terms of what pension funds could invest in, and being an emerging economy and yet wanting to deliver those long-term strong returns for members of pension funds. There was so much in that I do think it has given me a perspective today, especially in times of volatility like we have gone through recently, of how you have to bring enormous sharpness to managing all of the different aspects of a portfolio.
Absolutely. I do think definitely the stomach for uncertainty is pretty strong when one comes from those areas as well as just volatility in markets. And then fast forward then into your new life in Australia. You moved out of your own self-employed status and into more of a corporate ladder. Can you talk us through that and how you ultimately ended up as CEO at Hesta?
Yes. Actually, incredibly, when I arrived in Australia, obviously you have no network. I mean, I always reflect back. We came to Melbourne, we chose Melbourne, came to Melbourne and didn't actually know a single person in Melbourne. We knew some people in Sydney and Perth, but we chose Melbourne for a number of reasons that I think have played out. It was an amazing choice for us. But arriving with no network, and I took a year off actually to settle my children, and obviously had been a very big time for us making such a big move. But thereafter, looking for a role, my first role was in business development, which I think was a good choice because not having a network, not having worked in Australia, there was so much I had to learn. But incredibly, it was with a super fund, with an industry super fund, one of the profit to member super funds. And that's essentially where I have built my career. And a few early roles as I navigated a new country and new opportunities, but ultimately came to Hesta 15 years ago. And I've had 3 roles at Hesta. And maybe just Hesta's been an incredible place for me because it's a fund where almost 80% of our members are women. I do have an absolute passion for gender equity, gender equality, and Hesta has been so well aligned in terms of giving me the opportunity to make a difference on things that I really believe matter in the Australian landscape. But also the incredible privilege of working in a pension system and a super system that right now is the 4th biggest globally. And in fact, given our growth projections, potentially becoming the 2nd largest behind the US in the next decade. So it's been an incredible industry. We do a lot, obviously, and do make a difference for our members. But what's probably most exciting is the opportunity for the future and what will still be delivered.
Lots to dig into there. But before we start on Hesta per se, could you just maybe give us the lie of the land in terms of the superannuation landscape in Australia? How many plans are there? Where does Hesta stand in terms of size? And how can beneficiaries have the ability to select their superannuation fund?
Yes. Well, maybe to start with the super system, I think it's an incredible system. Obviously, I have some bias in that area, but what is significant, first of all, it's compulsory. So every employee in Australia gets 11.5% paid into their super fund. That will move to 12% in the middle of the year. They get to choose their super fund, but it is compulsory that they have this payment made into a super fund or a pension fund. And it's preserved until retirement. So very important that everyone has, I think, what's called elsewhere a pension pot. But what does stand out in Australia is choice of fund. So we are very much a defined contribution system. There are some defined benefit plans, but we are really a defined contribution system. And every Australian chooses their fund, and what is significant can change it at any point. And in fact, if one of our members chooses to change their fund from Hesta to another fund, we actually have 3 days to implement that rollout from Hesta to another fund. Now, when this choice of fund was introduced, I think there was a lot of nervousness as to the impact it would have on super funds. It certainly has driven competition. It certainly has driven a significant reduction in the number of funds. And we probably have looked realistically, I think you could say up to 100 standalone funds in Australia. It is dominated by larger funds, the situation in terms of how funds deliver. There is a small group of extremely large funds. We tend to call them mega funds. Hesta is not one of those. They would be well over the $200 billion mark in terms of Australian dollars. And then we are in a category we would call large funds. So it's probably the largest 10 funds in Australia. And Hesta has $92 billion in funds under management. But probably important to note that we have over 1 million members, well over 1 million members. And this incredibly competitive environment where we really need to understand our members and deliver to them and meet their expectations, which is obviously what we focused on.
And what I think is really remarkable is the level of member engagement in Australia, because that seems to elude many other countries in terms of getting people interested in their pension and actually thinking about it in an active way. How do you think that has been achieved in Australia? Has it come from just countrywide publicity, awareness? Do you actively engage with members and encourage them to engage with you?
Yes, Ethan, absolutely. And probably all of those, actually. I think the competitive environment does drive a certain amount of member engagement. There also have been some amazing campaigns. And in fact, over the last 20 years, Hesta was a part of a campaign targeted at driving awareness, particularly of industry super funds. So very important that we are profit to member funds. And there's a number of these profit to member funds in Australia. We call them industry funds because we started out focused on particular industries, although many no longer focus on a particular industry. But it is interesting. We do have, I would say, high levels of engagement. It's driven by media, it's driven by social media, it's certainly driven by the competitive environment and significant investment in our brands. And if I can maybe speak specifically for Hesta, we have invested very significantly in our brand and in the trust that members and potential members associate with Hesta. So we do have higher levels of member engagement. I still think there's work to be done in that space of really supporting members to make good decisions right throughout their journey. Because like any system, I think younger members are potentially less engaged than older members. And we would love younger members to engage more, and especially while they have a lot of time to still get the advantage of compounding in terms of returns.
And one of your taglines that you lead with is super with impact. And that has become quite a loaded term. It maybe means different things to different people, but I do think it resonates perhaps with members. So what does that mean to you? And how are you allowing your super have impact?
Yes. So what does super with impact mean to us? It's actually a very big question. It's our positioning of what we're delivering to members. And from our perspective, it's the positive outcome that we can create. And 3 really important dimensions to this. And the first one is actually supporting our members in terms of them facing the future with confidence. We have such a deep understanding that for our members, it is about seeking that dignified retirement, etc. But it is really important that we're building their confidence in that. The second aspect in terms of the positive outcome we create is by being a gutsy advocate. And we actually call ourselves that. A gutsy advocate for a fair and healthy community. And the third one is a very big pocket that is focused on delivering investment excellence with impact. So bringing these 3 pillars together, that is how we define super with impact. And in fact, we've trademarked the term super with impact, very much focused on this opportunity we have to deliver positive outcomes for our members.
I'd love to just dig in a little bit to the investment side of that. So you mentioned investing with excellence and with impact as part of that. How, as we've had other superannuation former leaders on this podcast, and they've spoken about the emergence of the total return approach, which seems to be getting a lot of currency. Is that how you approach your investment allocation, investment angle, is with a total return lens?
It is how we approach it, and probably a good time for me to say that everything I'm speaking today is obviously general in nature. It doesn't take into account any individual circumstances. But absolutely, we do take a total return approach. And I think it's very important as a global investor, as a very diversified investor. At the end of the day, we are absolutely focused on delivering the best long-term returns we can for our members. And that a total portfolio approach and thinking through that is certainly helping us in terms of how we position the portfolio and what asset classes, what geographies, public and private markets, how we build that portfolio, how we monitor it, and how we optimize it.
And then on the impact side, how do you integrate sustainability and some of the other principles that other institutional investors of your size are focusing on, such as focusing perhaps on the energy transition or the impact of the investing or the engagement that you do?
Yes. Well, I think at a high level, it's probably just worth observing. We believe there's a deep connectedness between our investments and the global economy, environment, and society. And this really is what informs us and informs our decision-making around investing with impact. So how do we do that? I think, first of all, we are deep believers in an active ownership approach. And for us, that really does mean being active owners. I think in Australia, we tend to use this word of active ownership. I think globally it is times referred to as stewardship, and probably both very similar or at least the same in many ways. But I think for us, it's this notion that active ownership is active. And what does that mean for us? It means engaging with the companies that we invest in. It means not only voting, obviously, at AGMs and making sure we exercising those shareholder responsibilities, but being prepared to talk about them, being prepared to advocate about them, being prepared to have a fairly strong media presence on the way that we are doing this. So active ownership is very much a core attribute of how we intend to drive super with impact.
And as a fund at $91 billion in assets under management, clearly you have a muscle that can be flexed, or you have a certain amount of clout on the investment stage. How does that translate into your position, say, around fees or around the type of investment that you would consider, maybe because of your position on fees?
Yes, it's really interesting if I think of all of the objectives of what we're trying to deliver for members and weigh them all up. Obviously, fees are important, especially as you can imagine in this very competitive environment in Australia, where members are often comparing not only returns, but actually also the fees that we charge. So we have a number of objectives that we continually trying to manage from an investment perspective. I do want to be clear, the main one for us is net benefit. What do we deliver in a member's account after fees, after tax? That is the main focus area for us. Now, of course, we have to be mindful of fees. We are very thoughtful in that total portfolio approach of where we're going to choose to have low cost exposures. So even, for example, have passive exposures versus where are we going to choose to use some of our fee budget, for example, in some of our private asset areas. So it is about really juggling all of these different objectives, bringing it together, but if I can say really driving to that net benefit outcome. And actually, in a very Australian context, I think every country, every industry is probably similar in having many awards and accolades that organizations can win. But the one that we are most proud of in Australia is that in 4 of the last 5 years, we have been recognized with an award by one of the most significant superannuation rating agencies, which is called the Net Benefit Award. So being mindful about fees, but we are very proud of the approach we've taken where we are so focused on net benefit.
Well, congratulations on those awards. That sounds wonderful to hear. And use the term benefit. And we've talked before about the term impact and how that can mean different things to different people. And benefit, I suppose, can be holistic benefit as well. This is something that will definitely be, I think, a subject that's very much in the minds of UK listeners because of government policy now around pension funds investing locally. What do you do in terms of local investment in Australia? Is that all case by case and based on net benefit, or do you have any preference or any target in terms of investing in the home country?
Yeah, we definitely don't have a target in terms of investing. We see ourselves as a global investor. We do have a large amount still invested in Australia, and obviously we value that because I think it does play a very important role in terms of the Australian economy and driving benefit for our members. But it also is the tax treatment. We have a particular tax treatment of dividends in Australia, which means that from a tax perspective, it's very attractive to invest in Australian equity. And if we look at an after-tax return, we need to get a better return globally to justify investing globally versus domestically. But actually, I think what we are seeing is an increasing awareness from funds that we will invest more and more offshore in the next 10 to 20 years. So we don't have a bias towards investing in Australia other than the desire to deliver the best possible return to members and understanding the benefits of diversification. And of course, that's global asset class as well as geography. So it's not a target, but I do understand the benefits. And if I reflect a little bit in Australia, I think Australian funds have historically also had quite high allocations to growth assets and quite a strong appetite to invest, for example, in private equity. So I think that has helped us from an economy perspective. And we certainly have had engagement, for example, with the UK government, where I think they're asking us, how can we help? And would we be interested in investing more in the UK? And also, I guess, how do you make capital, this long-term focused capital, more available in terms of driving outcomes for countries and in terms of the economy?
Well, that's the wonderful thing about being a thought leader is you will be asked to share your best practice on a global stage. And I'd say just tied to that, governance is often a question that comes up when it comes to very large funds like yourselves. In the UK, as you know, that is a work in progress in terms of the public funds and their consolidation. What have you developed as your governance approach and how does it work well for your strategy?
A great question. I'll start by saying we really believe deeply that good governance adds value. And we certainly see that at Hesta. I think we're very mindful of, in a sense, a governance budget. How do you use it wisely? How do you use the role of the board in a very distinct space to the role of management? How do you use it in terms of the particular investment committees? And how do you really make sure you're optimizing governance as an organization? Now, obviously, we have, like any jurisdiction, we have regulatory requirements. We have two very significant regulators. We have two licenses we operate under. And that gives us some requirements of governance that are not optional. And obviously, we lean into that and seek to be excellent in delivering that. But if I think of governance more broadly in terms of what the opportunity is, I really think a focused board and a board that really understands the value they add and where they really make a difference. One of the exercises that I have so valued of the Hesta board that's led by the chair is a piece of work she does almost every year. We occasionally will do it every 2 years, but really getting the board to brainstorm what are the areas in terms of our strategic agenda where they will make the biggest difference for our members and being very disciplined in how they navigate that. Because any governance body, I think you can end up spending your time on the wrong things. And I think this is our chair's effort to really make sure the board is focused on those big buckets that they can make such a big difference and not being distracted by things that they maybe have to have oversight over and have a good governance arrangement, but really be mindful not to spend too much time on. So I think for me, governance is deliberate and it should be deliberate and really being clear that it's adding value and testing that, of course, through performance reviews, etc.
Couldn't agree more. I think that kind of self-effectiveness assessment, the reflection that gets done maybe once a year or however, is so critical to avoid just slipping into a routine governance where it loses some of its impact. So it's really interesting.
Maybe I'll just add, I think the diversity of perspective at a board level, I certainly see this. We obviously have been very committed to gender diversity at the board. We have tremendous age diversity, tremendous experience of life diversity, but that real benefit at the board table of having those different perspectives and independence of thought, I think is an enormous benefit to an organization.
Well, that's a perfect segue to my next question about diversity. And you've caught my attention on LinkedIn with some of your campaigns, your policy, your amplification of the work you're doing at Hesta around diversity. And I think you mentioned also the visceral connection with your beneficiaries and your members, the large majority of whom are women. And that's often the case in many public funds, certainly in the UK as well. So can you talk a little bit about this, the stand you take, the impact you're hoping to make, and some of the difference you're hoping to make through your approach?
Yes. Maybe just to reflect, obviously, incredibly important that we align with our members, with our beneficiaries. And in fact, when we go to our members and ask them about how we should invest, 8 in 10 of them, the members that we survey, say that it's important that we invest responsibly. Now, we obviously go down a layer and define, what does responsible investment mean to our members? What are the categories that really matter? What should be no surprise given the fact that almost 80% of our members are women, and given the fact that gender diversity is still an ambition in Australia, if I can put it like that. It certainly isn't something that we have really achieved in many different dimensions. The fact that in Australia, women still retire with about a quarter less in their superannuation balance than men. So there's a lot of work still to be done. And one of the pieces we have led is a piece of work called 40/40 Vision. I think we all know globally the incredible achievements, and some of the credit must go to the 30% Club, of gender diversity at board level. But what we noticed in Australia was that gender diversity at executive levels was lagging. And in fact, you could even argue that maybe good achievement at the board level has in some ways eroded the achievement at a management, at an executive level. So we launched this work in 2020, calling on ASX 300 companies to commit to at least 40% of their executive management teams identifying as women, 40% identifying as men, and obviously the balance either of those or alternative identifications. And it's been incredibly successful, I would say, in that we have driven awareness, we've driven far more prominence of targets in ASX 300 companies. We haven't got there yet in terms of having terrific diversity, but we certainly are on the journey. And I think one of the powerful aspects of this, it has been an investor-led initiative. And I do feel investors, because we know that these issues are financial. This is not just because it's the right thing to do. This is because as an investor, we are seeking the best possible performance from the companies that we invest in.
And I suppose it's one thing to have a vision. Then the second part is having seen that vision implemented. How receptive have you found the companies or other managers have been to this 40/40 goal?
Yes, diverse, if I may say. If we think right now, only 27% of ASX 300 companies have gender balanced executive leadership teams. So there are a lot that don't. Some of them, I think, have been incredibly responsive, and actually some of the difficult companies, some of our very large mining companies, energy companies, where they don't have the pipeline of women that they need to have and that they want to have through their middle management layers. They have lent in incredible ways, committed to targets, committed to good engagement, and have programs really in place to support this and to support the fact that they need to do a lot of work right across the business. But some of them, I think, are a little bit in the tick box, and some of the engagement is also lots of yes, but we don't really see anything changing. So I think it's very diverse, but they certainly acknowledge the fact that we are putting this on the table and we are driving the agenda. And I think the fact that Hesta has a voice, given the Australian members that we represent.
Well, I'd love to just, before we move to some closing questions, just find out what else is on your mind now in the CEO role. We know about impact and this vision around 40/40. Anything else that's at the forefront of your mind now as you look to, say, the next 5 years?
It has to start with members. I think what we are trying to deliver, what we're trying to achieve is very, very much focused on what we can do for our members and how we can deliver better outcomes and better experience for them. So we are launching significant amounts of work and, in fact, including a technology transition, a very significant technology transition that will happen over the next 3 months. So I am very focused on this. How do we deliver for members? How do we harness technology? How do we harness artificial intelligence to really make sure we're bringing the best outcomes for our members? I also think we are at an incredible time globally when we do have the opportunity bringing the responsible capital that pension funds like Hesta bring to the table. And actually, I had a conversation with a chair of an ASX 20 company 2 weeks ago, where he started playing back to me the investor capital they seek and the fact that some of their investor capital is not in the long-term responsible space that they really want to have. As a corporate, if they want to bring about the change that they need to bring about, and this included, of course, commitments in terms of climate change, aligning with the objectives of the Paris Agreement, they need the right capital at the table as investors. This is something I'm giving a lot of thought to. How do we globally make sure we are harnessing all the attributes of good, responsible investment capital? So that's very close and dear to my heart.
I suppose it gets back also to that thought leadership role, when you can present that impression of a thought leader that has been there in terms of the governance and is getting it right in terms of the balance with members. I think it's easier certainly to garner global support. So thank you on behalf of other institutions for the work you're doing there. I'd love to just now go back to some closing questions and reflections. If we look back at the course of your journey and from the time you're in South Africa right through to now, were there any setbacks or challenges there that you learned lessons from that you can share?
Oh, that's a really good question. I think when you build out a career, absolutely. I think I've had times when things haven't gone the way I wanted to. I mean, one setback I would probably speak to is where I took a role that, to be honest, was just not the right role for me. And I thought it was. I took it for the right reasons. And this was in my early career in Australia, but really very quickly realized I'd made a mistake. And I'm very proud. Actually, we were on holiday and I was 3 months into this role and I found myself taking very early morning walks and just really getting to the point of knowing I'd made a mistake. And I remember my husband challenging me and saying, is that really what you think you should be doing? Should you not be more committed to it? Give it a year, give it 2 years, think about it. And I knew that I'd made a mistake and the right decision was a pivot. So I think for me, knowing when you back yourself and you're prepared to just do the hard work versus knowing when you have to call it early and do something different. And for me, that was, of course, calling it early and doing something different. And I'm to this day very thrilled that I did.
Well, very sound advice there. I'm sure many of our listeners, it'll resonate with them. Looking at any key people across your career, were there any particular mentors, sponsors, or just people who influenced you along the way? And it does not have to be an exhaustive list. I always have to add that.
Oh, I've had amazing people influence me. And some of the women in Australia, my previous CEO at Hesta, 2 amazing female chairs. I've just had the most incredible input from people that I really value and respect and admire. So I do have a lot. If I go right back, I think I put my father on the list. My father was a business owner. He was passionate about debate and thought and taking action in your life. I think backing yourself, self-belief, and I was the middle of 3 daughters, and I really love what my father gave us, the self-belief, the deliberate nature to everything in life. I mean, dinner conversations every night were intense and amazing and actually often very political, obviously in a South African context, but incredible for me in terms of just finding myself. And of course, I didn't find myself. I'm not saying I found myself as a teenager. I think everybody has a journey of knowing who you are and working out who you are. But I do go back to those early days and they were very impactful for me.
I love that image of the dinner table conversations. My last question is around any creed or motto that you live by or any advice you might have for your younger self. Is there anything you can leave us with there?
I'm going to go to a quote, and I think it probably is my favorite all-time quote, and it's a JFK, John F. Kennedy quote, "If not us, who? If not now, when?" And it's something I reflect on very often in my mornings, my early mornings, my kind of short meditation time that I try and grab and hold on to every morning. But just incredible to always be reflectful. We sometimes think, does it have to be me? Do I have to be the one who raises that? Do I have to be the one that forges out with something particular? But if something's on our heart and if it's not us, who will it be? And also that aspect of timing. I think sometimes something's on our heart and there'll be a moment. There'll be a moment, and the moment is invariably now. It's not next week or next month. I mean, there are occasions you have to be a bit patient and wait for the right timing. But from my learnings of my life, I think so often the timing is, in fact, right now.
I love that. I think in this economy and volatility, we tend to think of an action bias as being a negative thing. But I think a bias towards action is actually mostly an extremely positive thing. And you have shown it. And from the recollection of the dinners with your father, there is a touchstone that is, I think, a constant throughout this conversation. It has evolved into a touchstone around members first. And some of the most memorable podcasts I've recorded have been with other pensions executives like Penny Green, whose touchstone is putting the members at the heart of everything she does and did at Sol. So I think you've been a wonderful continuation of that mission. And I wanted to thank you and the team at Hesta, all of whom I would love to feature on this podcast, for being gutsy advocates, because that is something that you live and breathe. And I think that all of us feel, even across the miles in the northern part of the financial world. And thank you for the standard you're setting, the example you're setting, and your leadership in these turbulent times.
Oh, well, thank you so much for this opportunity and just the incredible work you are doing, bringing stories to life. I love stories. I think they're just so warming, but they're also so inspiring. So thank you for letting me be part of this, and most importantly, the incredible work you're doing.
Thank you, Debbie. I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts, wherever you get your podcasts. You can find all of our content on the 50 Faces Hub, where you'll find a library of role models, resources, and other solutions to enhance your career. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.